Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video we are looking at 5 different companies that have a high return on invested capital. Return on invested capital is a crucial metric that evaluates how effectively a company uses this capital to generate profit. What that means is how the money that we've given, the money that they've got from from the banks and so on, what are they doing with that money to actually generate more profit for the business. And this kind of indicates how well a company allocates its resources to profitable and investment. So they're taking all our money, what are they doing with it? And high return on invested capital tells us basically if this management is really effective or not. So what I'm going to do is I'm going to share with you guys 5 companies that have a high return on invested capital. Some of them is in the 40s, some of them in the 30s. So I'm going to share that with you guys. Some of them are a little bit overvalued right now. So as always, do your research. As always, make sure these companies are good businesses to invest in if you are interested, of course. But before we do that, I just want to share with you guys, it looks like Trading 212 has slightly changed. They had this new feature on beta recently, but they've now completely switched, and I don't know how I feel about it. It's just a bit very strange. So yeah, I will evaluate in the next couple of days and I'll let you guys know, but it's still more or less the same. It's just it just looks slightly different. I would have liked if this was slightly updated, so it tells us total dividends that we received instead of going to history to find it. Total dividends, total returns, and things like that. Just a bit more information, because there's a lot of space wasted around here. But yeah, anyway, that's Trading 212. Let's get started. If you haven't liked the video already, please do so. If you have not subscribed to the channel, please do, because it really helps the channel. You can also join us in the Patreon account, where you get access to the Discord. You get all the buys and sells that I'm making. All the brothers are on the Discord. They also share that as well, the dividend calendars and so on, and then Sharia compliant investing ebook. Now let's have a look at the 5 companies. I don't want to make this video any longer because I'm sure you're all inshallah looking forward to praying Taraweeh and Tahajjud, and may Allah accept our prayers and du'as inshallah, and make most of the opportunities in the last 10 days of Ramadan inshallah. Can't believe it's already the last 10 days, subhanallah. So it's just flew so much. So first company we're looking at is Illinois Tool Works. This is one of the industrial companies. A market cap of $80 billion right now. It has a narrow economic price of $268 per share. Dividend yield just above 2%. Payout ratio of 56%, and latest increase was 7%. The 5-year growth rate of 9%. Dividend streak of 52 years. So they are a dividend king. What that means is the company that has paid a dividend, paid and increased that dividend for 50 years in a row. Just think about that. 50 years, 52 years in a row of increasing that dividend every single year. What's happened in the last 50 years? We have all sorts of things happening, recessions, wars, and all of that stuff. This company continued increasing that dividend, and this is the type of business I like to invest in because of that predictability of that income to investors. And again, I love dividends because of course that cash, that passive cash that you get from this company is absolutely wonderful. I've been talking about dividends. I've got a video coming up inshallah about the how much dividend I've received in the month of March, over 200 something pounds, I think it was. I'm going to share with you guys almost 14 different companies paid me. And I also got portfolio update. I've also got another portfolio update. Plus, I want to tell you exactly what is going to happen with this account. So now we've reached over £100,000. What is the plan and how did I get here? So there's a lot more information I want to share with you guys. How I got to this £100,000, as well as what I'm going to do moving forward with the portfolio. Because I know there's a lot of new brothers and sisters that have joined the journey recently. So I will give you a little bit more information on that. So yeah, so annual payout, we're looking at $55.60, safety 81%, profit margin of 18%, return on equity of 97%, and return on invested capital, which is what we're interested in, so ROIC, is 36%, which is really good. That means the management are effectively using our money and the money that they get in from all sorts of places to actually generate more profit for us, so they can continue making profit and continue to paying that dividend, continue innovating and basically using that cash. Free cash flow right now $3 billion, which is nice to see. Total return the last 10 years 14%. Growth estimate for the next year 8%. Growth estimate for the next 5 years 14%. 26% premium right now. $211 per share is where they think the price should be. And looking at the revenue for the next couple of years, it looks like it's heading the right direction from right now $16.11 billion to 16.5 and then to $17 billion. And again, similar thing when it comes to EPS as well. Now, the next company we're looking at today is Mastercard, is one of the companies that I own in my portfolio. 450 billion market cap right now. Moat is wide, priced $481 per share right now. Dividend yield 0.55. Payout ratio only 19%. So the payout ratio is also important because it tells us only 19% of their net revenue, basically they are net income, they using to pay out that dividend, so they have a room to grow that dividend. Basically, some companies will have in the 70s and 80s, and that's where it becomes dangerous unless they are REITs, okay, real estate investment trusts. Latest increase was 16%, 5-year growth rate of 17%, dividend streak of 12 years. So the company has increased that dividend for 12 years in a row. They pay you $2.64, safety 99%, the highest anybody can get is amazing, 99%. Profit margin 12%, return on equity of 29%, and return on invested capital of 61%, which is absolutely huge. Almost $11 billion of free cash flow right now. Total return 21% in the last 10 years. Growth estimate, this includes price appreciation as the dividends as well for every single year for the last 10 years. Growth estimate for the next year 16%, then 18% after that every single year for the next 5 years. Fairly valued right now, $451 per share. 481 is where it's at, so $30 above where it should be, but not too far off. Okay, the next one is Visa. Of course it is Visa, because anything Mastercard does, Visa can do it even better. So let's have a quick look though in terms of revenue side of things, where the company is heading. So right now $25 billion basically this year. Next year, so 2024, they're expecting $28 billion, then they're expecting $31 billion. So the revenue is actually heading the right direction, and if we just look at the annualized, it's also heading the right direction from right now where we are to where we're basically going to be next year. And just to quickly have a look at estimation for the revenue side of it, I think it's double digits for every year for EPS as well as the total revenue side of things as well. Now Visa, $561 billion, so it's slightly bigger company, or basically bigger than Mastercard. Wide economic price $279 per share right now. Dividend yield of 0.57, so it's slightly and higher dividend yield, but still that less than 1%. And this is one of the reasons I like the companies, basically because they are increasing that dividend every single year, because they have a very low payout ratio. Latest increase was 16% in the last 5 years, which is absolutely wonderful, and 15 years of increasing that dividend. So another 10 years they will become a dividend aristocrat. Annual payout is $2.08. Safety 99%, 53% profit margin, return on equity 46%, and return on invested capital of 34%, which is really good. $19 billion of free cash flow right now. That money, they could do a lot with that. They can pay as dividends, they can buy back their own shares, they can pay off any debt the company has, they can of course reinvest in the business, they acquire other businesses, they could do a lot of things with that money, which is really nice to see. I like companies with excellent free cash flow. Total return in the last 10 years, we're looking at about 18%. Growth estimate for the next year, we're looking at about 13%. Again, this gives us an idea of where the business is heading. Growth estimate of the year up, basically the following 5 years, 12%. Fairly value right now, $260 per share is where the price should be according to them. Right now it's about $280, so not far off. They're still under that territory of fairly valued. And look at the revenue side of things, so from right now $32 billion to 35, then to 39. And then of course EPS is also heading the right direction, which is really good to see. I mean, these companies have been around for a very long time. They have a predictable businesses, but they still grow in double digits every single year in terms of EPS, in terms of double digits, in terms of revenue as well, which is a wonderful thing to see. And they have that high return on invested capital, which is what we're looking at today. The next company we're looking at is ASML, another company that I own in the portfolio, a semiconductor company. This company has monopolized the market when it comes to, developing those equipment that's needed to make the chips that we all need. The Nvidias will not be able to do this. The companies like Tower Semiconductor will not be able to manufacture all of these equipments, all these chips that these companies need, without the products this company creates, which is absolutely amazing. 378 billion market cap. It has wide economic moat. $970 per share is where it's at right now. Dividend yield of 0.65. Again, another low dividend. Okay, and payout ratio was only 31%. Latest increase was 6%, and the 5-year of 24%, which is absolutely amazing. Okay, dividend streak of 14 years. $6.31 is what you will get every share of this company. Safety 82%, which is really good. Profit margin of 28%. Return on equity of almost 70%, and return on invested capital of almost 50%, 49%, which is absolutely huge. $3.5 billion of free cash flow right now. Total return in the last 10 years, 27%. Again, this is important to just have an idea where the company has been. Okay, and this tells us where the company is expected to be. So it's really important to kind of look back and, of course, look forward as well. Okay, so 46% expected to grow for this year, then 22% every single year after that, 31% premium right now. It's really expensive. I'm not touching this company for quite some time. $750, that's almost $200, $180 basically higher than where it should be for next year, basically, by the end of this year, which is quite expensive in my opinion. And look at the revenue side of things, $30 billion to 30.4 to $30 billion. So they're expecting a bit of decline by the end of this year, and then the year after they're expecting $37 billion. So it's going to bounce back, but this will be interesting. If because of this, some people might decide to sell it off, which will be absolutely wonderful, because I would love to add to, because I trimmed it recently. I think I've sold it 3 shares. Would love to buy them back and maybe lower price. So we'll see what happens anyway. But they're expecting slightly lower. Again, these are cyclical businesses because it depends on how the economy is doing and so on. But also EPS is slightly declined from 21 to about 20, so nothing huge, but it's a little bit declined there. And final company is Adobe, one that we've recently started talking about. 226 billion market cap, wide economic moat. Of course, they don't have any dividends, but they do have profit margin of 24%, return on equity of 32%, and 36% return on invested capital, which is nice. $7.4 billion of free cash flow. Total return in the last 10 years, 23%, 13% growth estimate for next year, 13%, and the growth estimate after that for every single year for basically is 12%, which is really good. Okay, despite the company reporting and saying, okay, all this mad stuff about AI, still growing double digits, which is really good, and 17% discounted right now. The only one that's actually cheaper than where it is right now, and in terms of expectations, $610 per share, but right now it is, what happened to the price? Okay, let me just drag that down. Formula should so yeah, 504. Okay, which is not bad. Okay, so it's about 100 basically dollars from where it is, where it should be right now, basically. Oh, by the way, just to quickly finish it off with the ASML, just in terms of expectations moving forward, as you can see, that's the big decline we've seen, and then after that, look at that, double digits, massive double digits there. Again, the same thing here. So Adobe is the company that we're now looking for, ADBE. And if we just start with the revenue side of things and see where things are heading, we'll change that to annualized. As you can see, it's heading the right direction, basically. 19.4, 21.4, and then 23, and so on. It's heading the right direction when it comes to all of that. And finally, we're looking at the earnings estimates, growth estimates. Again, 12%, 13%, 15%. Again, absolutely double digits in everything. So again, really wonderful businesses, great businesses, all of them. As you can see, some of them are discounted, some of them are fairly valued. Of course, if you're interested, do your own research. But in my opinion, these are really quality businesses. I've never owned Illinois Toolworks, but I have these 3 in my portfolio, and I did own Adobe, and I'm considering possibly adding it to the new portfolio that I'm going to do soon, inshallah. but we'll see inshallah what I would do with this. I just need to do a little bit more research on that, but I do own these three just to quickly be on transparent and to show you. Okay, ASML, there you go. I have 5 shares of that company, up over 50-something% on that one. Mastercard is a new addition to the portfolio. It's about 3% up right now. And then Visa, there we go, basically 29%, almost 30% up, over £1,000 up. And I've had this basically in my portfolio for quite some time. Now I'm going to stop the video here. If you haven't actually joined us to the Patreon account, please do so, because it really genuinely helps the channel. I hope you appreciate this type of content. It takes a lot of time and effort to put these things together. And inshallah, just do what you can. Like the video, subscribe to the channel. If you cannot do any of that, inshallah, make dua for me and for my family, inshallah. Have a wonderful day. Assalamu Alaikum.